This is Thriveonomics, presented by Thrive Mortgage. Well, good afternoon. Welcome back to another episode of Thriveonomics. And this time we're going a mile high to get this podcast recording. Before I get to today's guest, just allow me to introduce myself. I'm James Duncan, Director of Education and Engagement for Thrive Mortgage. And just a quick word about our title sponsor. This show is brought to you by Thrive Mortgage. If you heard a little bit about us in the intro, but if there's ever anything we can do for you to help out with any kind of residential financing need that you have, we excel at providing legendary lending experiences to our clients. So would love for, no matter where you are, would love for you to reach out to us at Thriveonomics at thrivemortgage.com, and we will connect you with a local loan originator who is an expert at doing what they do near to your location and put you in touch with them so you can start doing your thing. But anyway, speaking of one of those great loan originators, we have one on the show today. And joining me is LauraLeavy. She is a branch manager for one of our Thrive branches up in Colorado. Hi, Laura. How are you doing today?
Good, James. How's the weather down there in Texas?
It is actually surprisingly mild for an early summer day in Central Texas. How are things up there in Denver?
Beautiful today. I think we're about 83 degrees, sunny. Looking outside the office, I don't see a cloud in the sky. So
lovely. With the mountains in the background. Awesome. Well, Laura is a longtime veteran of the mortgage industry. You just celebrated your 30th anniversary.
I don't even look that old, right, James?
No. I mean, what, did you start when you were 8? I mean, come on. So,
yeah.
No, Laura's one of our favorite people in the company. She's a lot of fun to hang out with and just to chat with and get to know, and has been with Thrive for a number of years. How many years total have you been with Thrive Mortgage?
February was 6.
6 years. That's not, and in the mortgage industry, that's some serious staying power. And so we're very glad that she is leading the charge for our teams up in this Colorado area and specifically in Denver. And so I'm excited to have Laura on and just kind of pick her brain about just her background in the industry, what she's seen through all the ebbs and flows, and kind of talk about how things have been for the real estate market up there in Denver during kind of coming out of the initial COVID-19 scare and all that stuff. And we'll probably talk a little bit of Colorado Avalanche hockey as well. Probably get dispersed in there. If you're watching the video, you can see why that is. There's a good umpteen different pieces of Avs paraphernalia behind her on her wall. So yeah, she's big. Y'all are season ticket holders, right?
We are. We've been season ticket holders for over 10 years now.
All right, go Avs. Well, let's jump into the primary purpose of our conversation. So tell me a little bit about after being in this industry for 30 years. We'll start back at the beginning. How did you first get into the mortgage industry, and what kept you here for all this time?
I had a little bit non-traditional way entering into the mortgage space. My mom was a branch manager for a mortgage company. She spent most of her career in the mortgage business. I grew up with it, knew the terminology, and listened to her on nights and weekends talking to customers. And when I got out of college, wasn't quite sure what I was going to do with my life and wanted to take some time off and kind of figure it out. And she said, "No, not under my roof. You're going to start contributing." And so she's like, "You can come answer phones for me at my branch." And that's literally how I started. The first 10 years were on the operations side. I went from answering phones to kind of a setup role to that's kind of the, ordering verifications of employment and appraisals and stuff like that. And then moved into a processing role and was a loan officer assistant, did some closing and some funding. So really spent the first 10 years cutting my teeth on learning regulations and the necessary documents that are required and all things on the operations side. So it was really unique for me to spend the first part of my career learning that aspect of the business.
Cool. So when did you decide to make the transition from the ops side of things over into originating and actually working with clients?
It got to be about 20 years ago. I decided that I wanted something different. I did like the mortgage space. but I was working with a bunch of loan officers. I kind of liked the flexibility of their schedule, and I liked some of the aspects of that. And so I stepped into the sales side. I became a kind of a loan officer assistant and worked that for a little while, and then made the jump. It's been about 14 years now. And on the sales side, I've owned a company. I've been a sales manager, a branch manager, and all along been an originating partner in the space. I have a bunch of local real estate professionals that I've been working with for over 25 years now. And so very, very fortunate. Like I said, I do have the untraditional entrance into the mortgage business, but I'm very grateful and thankful for everything that my mom taught me and everything that I've learned along the way.
That's cool. So what's your favorite borrower story? Think back over the last 20 years that you've been an originator. Is there one particular borrower situation or borrower story that you got that really jumps out at you as like that's kind of the moment, the signature moment where I knew that I was doing exactly what I needed to do?
I do. I was back in 2003. The business was crazy. Interest rates were low at the time. I think the interest rates were low at the time. We're at 5.25% back then. That was like everybody was scrambling to try and get out of their 7% rates.
Right.
It's kind of funny now.
Yes, exactly.
But we were super busy with refinances, and I'd made some promises to my real estate partners that said, no matter how busy we get with refinances, we will always return your phone calls first. We will always put any purchase business first. And I had a real estate agent that I'd never worked with before give me a call and say, I have been working with a loan officer. I can't get him on the phone. I've got some borrowers that want to put an offer in on this house. It's their first home. They're super nervous. And can you help them? And they were a very young couple. I remember her name was Brianna, and I don't remember his name, but I remember her name. They had a little 2-year-old daughter at the time, and they were buying their first home. They were a Hispanic couple, had been in the States since they were young, but never really understood the process of buying a home. And so we, in as busy as we were, we took the time, explained the processes, and they literally cried at the closing table. They really did not understand kind of the American dream of owning a home, which I think a lot of us, kind of take for granted just because, we grew up in homes that our parents owned, but they were actually the first home owners in their families. So they were so excited for their daughter to have a yard to be able to play and grow up in. And so I stayed in touch with them for many, many, many years. I'd get Christmas cards from them, and they referred many clients to me. And it was the tipping point for me, only because when you get so busy and you're doing so many loans and you're helping so many people, it almost becomes, I don't want to say robotic, but it's the same process over and over again. And to have that broken up by such a human touch situation, it was great. I remember the closing date. I remember sitting there at the table, and I remember it all like it was yesterday.
That's very cool. And you made a great point in the fact that, you can focus on being the best at knowing every single guideline for every single loan program that's out there, know how to analyze what the market is doing so that you can make an educated guess on where rates are going to be 3 days from now or 4 days from now, however far out. Get all the analytics, set all that, get that together, set that aside. When you really focus on what exactly you're doing, those kinds of stories are the ones that keep all of us coming back to want to be in this profession and to be in this industry, because that's really what's the most important thing is being able to have those experiences and be a part of that monumental event in somebody's life, especially first-time homebuyers. That's really cool.
Yeah, it really made me decide that I wanted to work with first-time homebuyers. There's lots of different avenues that you can go down in this business, and first-time homebuyers, that experience, the gratification that they had for the process was so rewarding to me, and it just made me want to become a first-time homebuyer specialist. So. They do take a little bit longer to do because it's a lot of explaining, but I think it's very important and it doesn't bother me at all. I tell my customers all the time, there are no silly questions. You're not going to ask me a question that I haven't heard before. And so it's just instrumental to me to make sure that you understand the process and the procedures and why we do them. And they were the driving force on why I like so much to work with first-time home buyers.
Yeah. And even given the fact that now, let's fast forward through our careers, that you and I are part of that Gen X crowd that grew up in the 80s and the late 70s and graduates high school in the 80s and 90s and all that. And so we've gone through our crop of friends and folks that are from our generation, that they're no longer the first time home buyer. Well, for the most part, they're no longer the first time home buyers. They're now the move up buyers, or even in some cases scaling back, starting to get into empty nesters, which is a scary thought. So now the millennials and the Gen Zs are the ones that are coming in to the first time home buyer crowd. So it's very important, I think, for originators to kind of have that, hey, I'm here to be your trusted advisor approach, because the millennials that I've had the pleasure of working with as clients have been some of the most inquisitive and some of the most well-educated. I don't mean in terms of schooling, but well-educated in terms of what they have, the research they've already done. So they're asking great questions by the time that they start working with me. What's been your experience dealing with younger generation home buyers?
Funny you should ask.
Hey.
I get about 12% of my business right now from children of people that I did loans for their parents.
Isn't that interesting how that works out?
That just demonstrates how long I've been doing this. That little 2-year-old, she's not 2 anymore.
No.
So I get phone calls, and they're in their, 19, 20, 21, 22 years old. And they've grown up now in a home that their parents owned, and they made a mortgage payment. And so now it's a little bit different dynamic. But they're eager, they're excited. They want to get into that first home just as much as their parents did. And so, yes, it's different in that manner, that they're not the first ones buying the home in the family, but they still are having the same questions I answered 20 years ago from their parents. Those things have not changed.
Right.
There's still principal and interest. There's still taxes and insurance. There's still, when does mortgage insurance get paid? How much money do I need to put down on a house? Is there down payment available? Those are the same questions that I've answered for the entire 30 years in the mortgage business. Rates obviously change, and they go up and they go down, but people are always buying houses. My mom, I said, was in the business, and she would tell me when I would complain about maybe the rates bumping up a little bit, she said, come on, I sold houses when rates were at 13%. So that all makes us just get a big lump in our throat right now. But, it's true.
Yeah.
Real estate is going to happen. Mortgages are going to continue to happen. We're in a great environment right now, obviously, but, the first-time home buyers in the, that young, early 20s to early 30s market, you're absolutely right. They're educated in a different way than people were, 10 years ago. But I enjoy it. I enjoy being able to explain it in different ways to different clients. And it's challenging to me because it does get pretty robotic sometimes. But when you have the different conversations with people, especially the younger generation, and they do bring a different perspective and different questions, and they're looking at, they don't maybe want a 30-year mortgage. My parents always had 30-year mortgages. It was just what you did. And I have them asking me questions a lot about, how quickly can I pay off a mortgage? What can I do, and how can I maximize the benefit of getting it paid off? And that's not always the best thing. It's not always the right decision, but being able to look at their financial position, and it's hard for, I think, people that are 25 years old to be able to look at the grand picture of, where they're going to be in, maybe 10 years. And that's where we come in as a good financial advisor and be able to say, here are some, charts, and here's advice, and then make the right decision for everybody, which isn't always the same, obviously.
Yeah, that sounds like me.
Yeah.
'Cause,
You fit that bill
Yeah.
to a T.
I'm real scared of commitment. I mean, I'm married and I've been married for
I
a
was
long
about to say,
time.
don't tell your wife.
I know, but no, I mean that is actually a big thing for me. Is I don't want to get into. I don't have a house yet, and we were looking last year, and that was one of my biggest things. Like, man, that 30 years, that's a long time. And I think even like with the profession that I've been in for so long, like doing media, digital media, sometimes, well, most of the time it's like contracts. So it is scary, and that's one of the things I like about Thrive, and I've been here for so long, is because I was in California, and it was every year was a new contract with a new company. And halfway into that contract, it was like I have to start looking for my next contract. And so my brain is still kind of going that fast.
Mhm.
But yeah, when we were looking at a house, that was definitely one of the things I was scared of.
Oh yeah. Yeah. Well, I mean, that's a big adjustment. And that's usually, people don't make career moves based on, I wonder if I take this job, will I be able to qualify for a mortgage? They
Yes.
make those career moves based on, this is what's in the best interest of my career for this period of time, whether it's long term or whether it's just right now, I just need something to get by, to pay the bills until I find
Yep.
that position that I really, really want.
Yeah.
I mean, people make a lot of decisions. I mean, think about small business owners. A lot of times, especially restaurant owners, a lot of times they are paying themselves out of the proceeds of what they earned that particular day, and therefore, when they do their taxes, they may not necessarily report every dollar of income that
Yeah.
they actually earned.
Yeah.
But and so their income looks like it's way low, but really they're pretty flush because they have a good cash flow through their business,
Yeah.
and they don't make those decisions based on, I wonder if I do this, will I be able to qualify for a house?
Yeah.
They're just living their lives, living out their careers.
That's me.
But when you get exposed to mortgage loan professionals such as LauraLeavy, then she's the kind of expert that will be able to guide you through those conversations, help you plan for the future. So that's cool. That's really what I think. One of the big things that distinguishes Laura from a lot of other folks in the industry. So speaking of that, let's talk about your process. So how would you coach someone who is in that first time home buyer category? Where would you start with them?
I have a really good first time homebuyer class that is put on by a local nonprofit. That's what they do, is they educate first time homebuyers. And I strongly encourage all of my clients, and I use the word strongly, to attend that class. Right now they're all online, so it's really easy, obviously. But
Perfect.
yeah, and it's about a 3-hour, 4-hour class, but they cover so much, and it's instrumental to you'll learn about what kind of coverage you need to have for your homeowner's insurance, and how do taxes get paid in Colorado, because it's different state to state. And I mean, they go in depth, obviously, in a 3-hour time span, but
Sure.
I do encourage that in my very first conversation. And we talk about what is the plan right now? What's a 3-year plan? What's a 5-year plan? I have people that say, we want to get a big house. We want, 5 bedrooms and 3 bathrooms. And I'm like, okay, great. And it's you and your spouse. How many kids do you have? Well, we don't have kids now, but we plan to have lots of kids. Well, okay, so let's talk through that. Maybe them buying their very first house, spending every single dollar that they have is not the best decision to make. Maybe buying something that's more manageable right now makes more sense. Knowing what options you have to make real estate as part of your wealth portfolio. And so it's different for everybody. And so we talk about, what do you want in 3 years? Where are you going to be in 5 years? That matters in what we decide to do as mortgage professionals for people. And I have clients that call me and say, I have kids going to college and I don't want them to have to pay for, have big student loan debt. And I want to take cash out to be able to have them go to college and not have to worry about it. maybe that's the right decision. Maybe it's not. So whether it's a first-time home buyer and we're setting into a class to get as much education as possible, I bring in all my first-time home buyers. I like to see them face to face. I like to be able to understand, visual,
body language,
right?
Yeah.
And, people, if they're confused, you can tell. We can dive in and explain it a little bit differently. And I think that's really important. COVID has obviously changed that a little bit. So we're doing a little bit more of that by Zoom calls and online video calls. But it's super easy for us to be able to do everything online. People can go to our website. They can start there and fill out an application. We can do everything remotely. But it's super important to go back to that first-time home buyer just to make sure that they understand, what goes into an interest rate, what goes into a down payment, and things like that. And so I'm not sure I completely answered your question.
Oh, you did. I know that there's certainly more to the story, but you gave me exactly what I was hoping you would in terms of establishing the groundwork and the foundation of where you start with your clients, which is hugely critical. And one of the reasons why, especially on this show and all throughout Thrive Mortgage, you'll see us extol the benefits of dealing with a local professional instead of a call center, because LauraLeavy, branch manager for Thrive Mortgage, is not an order taker. She's not somebody that's just going to sit on the phone and say, fill out this application. Okay, your options are A or B, and not ask you a single question. And that's really what differentiates Thrive from a lot of other lenders, because we're not going to just call it good thinking that, oh, well, it's up to you to do your own research. No, other way around. It's up to us to ask great questions to get to the root of what are truly your long-term financial goals. Where you want, like Laura was saying, where you want to be in 3 years. Where are you still going to be in the house in 3 years? Are you still going to be in 5 years? Because every as Laura says, everybody's financial situation is different, and what loan scenario works for one person doesn't necessarily mean it's going to be the best product or the best fit for the next customer. So that's excellent. And so after you have pieced together the strategy, what's the next thing you can expect?
Yep. So we do things a little bit differently. We actually will get the loan pre-approved through underwriting. So we will verify employment, verify assets, verify program, verify everything, and actually have a human underwriter review it and give us that stamp of approval, so that when I call their real estate agent and say, Mr. and Mrs. Smith are ready to go, they've been approved by underwriting, that holds so much more weight when they're going out into the marketplace. The marketplace here in Denver is a little different than it is, I think, in a lot of places. Right. We're low on inventory. Buyers are competing for properties. And if a borrower is pre-approved by underwriting and their income and assets have already been that stamp of approval, right, that offer is almost as good as a cash offer when it's being presented as a seller. So when offers are going in front of a seller and he's got 10 offers and one is somebody that has basically done everything other than needing appraisal and maybe an inspection and some title work, it holds so much more weight. And the real estate agents that we work with, they're so thankful for that. And we have agents that get referred to us from other agents within their offices and say, is this really how you work? And it's easy for us just because we've always worked that way. And so it does elevate our buyers when they're going in and competing against other offers, and they're having a better chance of getting that property.
Right. No, it's spot on, because Austin and Denver are somewhat similar markets, namely in terms of the type of person that wants to move there. Both are very young, very vibrant cities. Y'all have a hockey team. We've got the Cedar Park Ice Bats. I'm just kidding. No, actually, they changed it. They used to be called the Ice Bats. Now they're the Texas Stars, because they're.
Oh, that's right.
Yeah, they're minor league or
Yep.
minor league
Wow.
system of Dallas Stars. Anyway, so we do have we got our hockey team too. We got a baseball team. They're the
Yep.
minor league affiliate of the
Yep.
Astros.
Yep.
So we're the minor league Denver. Let's just go
Yeah.
ahead and call it that. But we got better music, we think.
Yes.
You
Anyway.
do have better music.
we do have that. But anyway, the cities are pretty similar. Real estate markets are pretty similar as well. It is definitely a seller's market in Austin.
Yep.
So that's very, very true. And what's funny is that I have worked with some listing agents. I actually had one or two clients that have come my way because the listing agent would not accept the pre-qualification letter presented from a national online lender. And they were like, nope, I don't trust these guys as far as I can throw them. And so you go get approved by somebody local, somebody that knows what they're talking about. So I was able to work with them and get them pre-approved and get the deal done. So it's interesting to see how even the reputation of lenders is carrying over to the realtor community
Sure.
as well. They know who can close deals and who can't,
Yeah.
and who's going to do a better job at doing it. So it's really interesting seeing all that play out. So
we also, James, too, I do a call myself. I've got a great team behind me, but there are things that I definitely take on my own shoulders, and I will call the listing agent, the agent that's representing the seller, when I have a buyer that's going to be submitting an offer, and I just call them and give them a verbal lender letter.
Yeah.
A warm and fuzzy, this is why you should accept this offer. And I can't tell you how many times I have the listing agent say to me, you are the only lender out of 8-10 offers that actually called me and took the time. And I'm like, the 2 minutes that it took,
right.
We're not talking about hours of time.
Right.
It took 2 minutes for me to call you and just introduce myself. Who am I? Who do I work for? And I'm representing these buyers, and they've already been pre-approved, and this is why you should accept their offer.
Yep.
And so, and it's not just my practice. I mean, those are the things that Thrive, Thrive loan officers do. We work for a great company and have great systems and technology, but we all share within each other. It's not a competition between us all, and we share with one another. And when something works like that, we just pass it on. It's just how Thrive is.
Yeah, absolutely. No, I couldn't have said it better myself. I mean, we should put you in charge of marketing.
Yeah.
So as we kind of round things out a little bit, let's talk about what business is like for you right now up there in Denver. I mean, obviously we know we're dealing with historically low rates, as you alluded to earlier. And I kind of chuckled when you talked about your mom closing loans when interest rates were at 13 and higher. So yeah, it's really amazing if you look back through historically. Look at those. We still had real estate booms back when the rates were in the double digits, and it was just exploding. Now I think that a lot of folks have gotten a flavor for these insanely low rates. So I think this environment is going to stick around for a while. And whether even if it's maintained at an artificially low level, I think these low rates are here for a good long while. So what is business like for you? What's the balance between the refi applications versus the purchase applications?
I do think that the purchase business in Colorado was a little bit slower to come back than some other parts of the country. Really, in the last 30 days, did we actually see the ability for agents to be able to show houses again and have some open houses and those kind of things. So we were a little bit, I think, slow to get back in that aspect. But I'll tell you, it's gangbusters right now.
Good.
And so it's super busy. We have kept the same motto, though. I told you back 2003 was the best year I've ever had in the mortgage business. I closed 82 loans in 1 month, and we were busy. We had 42 purchases and 40 refis. So we're not that busy right now, but we definitely are taking purchases as a priority.
Of course.
My entire team is focused on making sure every morning that We're touching with our purchase clients, making sure that they're in a good place. We're touching base with the real estate agents, the title companies.
Right.
And then, with refinances, we're getting so many past client referrals and just being able to help all of the people that we've been able to help over the years.
Good.
And yeah, staying very, very busy.
I imagine so. Yes. Are we all? So what's on a non-mortgage topic related question? What are your favorite things to do up there in Denver? Besides we've already talked about the Colorado Avalanche, and yes, you're a season ticket holder and you got all the signed jerseys.
Yeah.
But when hockey season is not in hiatus, yeah, we'll call it that. So what else do you enjoy doing?
We are definitely, I'm married, and we definitely enjoy all of the sports teams. So it's not just the Avs, but we're big Bronco fans and we're big Rockies fans. And so, but we're big music fans. So we do like to go to a lot of concerts and we do hiking, being here in the Rocky Mountains. Everybody that lives in Colorado likes to get out and enjoy the mountains. So we've got a fun little convertible that we take out whenever we can and the weather's nice and go up to the mountains and do some hiking. And I love photography. So I kind of do that on the side. And yeah, that's pretty much it. Sports, music, and photography, and hiking and stuff like that. Yeah. That keeps us busy.
You're definitely in a pretty cool geographic location and taking all of that. Cause Colorado is one of my favorite, my wife and mine's favorite, just getaway destinations as well. Winter or summer, doesn't matter. But so as we kind of wrap things up, I know that you have gotten more and more engaged in social media over the last, we'll call it 18 months or so, and but you didn't really just kind of jump in with both feet from the get-go, did you? It took a little. It took a little convincing.
I dipped the toe in, and then I pulled back, and then I tried the other toe. Well, I mean, I'm old school. I'm old school, right? We've kind of talked about that already. Yeah. And I think I told you directly. I mean, I've been very, very blessed and lucky with a successful mortgage career with ever having to record a video.
Until you met who?
Until I met you.
Exactly right. No, I mean, one of the things that's been funny is watching your engagement on social media increase and how you have. Yeah, you were about as gun shy as they came in terms of shooting video, but once you started doing it and getting more and more comfortable with that, it kind of opened up a new door for you. So what is your engagement like since you started doing video and since you started adding that to your practice? What has that done for you?
It's actually been incredible. I should have listened to you a long time ago.
Well,
I should have just jumped right in that water.
Right.
I do work with a lot of millennial real estate agents, very, very engaged with video on social media. And so when I approached them about doing some first-time homebuyer classes and doing some other type of, video marketing, they were like, hallelujah, she's finally got on board. Yeah. And so the amount of engagement that I've been able to even piggyback off of doing some stuff with them has been amazing. I think I've gained 100 followers on Facebook in the last, let's just say the last 8 months.
Nice.
That's not bad at all.
No, not for active followers, not just people that like your page, active followers. Yeah. There's a big distinction there.
That's really good. How was it? Like because you didn't like it before, but how is it now? Is it easy? Is it easier, or what's your experience?
It's definitely gotten a lot easier. I am not so worried about making sure that my makeup's perfect or that what color shirt I'm wearing. I don't put that much thought into it like I did before. I was like, oh, I'm not having a good hair day, or my voice is a little cracky today. So I don't think about that stuff anymore. If I've got something important that I do a lot of text video, I do that probably more than I do anything. So I'll record a video in the morning and I'll send it out to all of my real estate agents.
Nice.
If there's something that they need to be looking forward to, I really try to keep it under a minute. So it's really short and sweet.
Yeah.
And that alone has really helped me get more comfortable with doing some more stuff on like Facebook and things like that. But
it's a lot easier than what people think. I think people kind of tend to overthink it, like you're saying, like what color shirt should I wear, things like that. And I think it really is, the less you think about that, the more just your personality kind of shines through. And that's really what people are looking for anyways, is just, is this person entertaining enough so I can sit through this video, and 10 times out of 10, it's like, if you kind of forget about all those details and just kind of go at it. I mean, everybody has their own personality. And so as like human beings, we just like gravitate towards those things. And so it's actually better for your content to do those things. So that's pretty cool.
That is cool. Why? So speaking of, sorry, I don't know what just came out of my mouth for that little transit. I was trying to combine like 5 words all at once. So Laura, speaking of social media, how do people follow you? What are your most active platforms that you're on?
My most active platform is definitely Facebook. Okay. So you can find me on Facebook at Loans by Laura. Cool. Laura is Laura. And I am definitely the most engaged on Facebook. I am now venturing out into Instagram. And definitely did some training this week with your co-partners on LinkedIn. So
there you go. Awesome.
See some of that stuff to come shortly, but yep. Loans by Laura is my business page on Facebook. People can definitely find me there.
All right.
I do have a Instagram account. That's the same thing. So it's very, it's easy to find me at Loans by Laura.
What about your TikTok?
I was just about to ask. Any TikTok videos?
What is TikTok?
Spoken like a 2 Gen Xer. Awesome. Well, Laura, thank you so much for hopping on, and we really appreciate you taking the time to join us, especially during this busy time. I really enjoyed the conversation. I hope you did as well. If you got any, if you guys are listening to us and you are in the Denver or Fort Collins or Colorado Springs, or even if you're up in the mountains having fun skiing the slopes, and if you have any questions about whether or not you are in the right mortgage program for your financial needs, or if you are new to the whole home buying process and you want to talk to an expert, Laura is definitely a great place to start and get educated. So thanks for all that you do, Laura. Appreciate you having you on. And
right back at you.
All right.
Thanks, guys.
We will chat soon. So thank you everybody for listening. I'm your host, James Duncan, signing off. Thank you, Raul, for being here to help produce everything.
Oh, you're very welcome.
All right.
This is fun.
It is fun.
It was good talking to Laura too. That was really good conversation. So
yeah.
Awesome.
Yeah, she's awesome.
Yep.
Yeah. We love it whenever she comes to town.
Yeah, we do.
Check it in the mail.
All right. Fantastic. All right. Well, everybody, hope you enjoyed this episode, and we will see you next time. Bye-bye. Thank you for listening. We hope you enjoyed today's episode. The title sponsor for Thriveonomics is Thrive Mortgage. Licensed in multiple states across the U.S., Thrive Mortgage employs the best professionals, equipped with leading technology and the most efficient process to deliver a legendary lending experience. For more information about how we can serve you, or to find a local Thrive Mortgage professional in your area, please visit us at thrivemortgage.com. You can also contact us directly via email at thriveonomics@thrivemortgage.com. Thrive Mortgage is an equal housing lender, NMLS ID 268552.